Hey everybody, welcome to Trading Capital, and it is January 6th around 8:33 p.m. when I'm conducting this market analysis. And what we've seen within the first 4 trading days of the year is awesome price action, lots of volatility, and it was the price action to the downside, which is what we were exactly expecting. Therefore, we've been able to capitalize on numerous shorts and quick swing bounce trades through intraday price action. So starting off with Bitcoin, let's jump right into it. Bitcoin is at a critical price level. It is basically make or break time. And if we take a look at what the price action is currently doing. So here you have a major support line. And these little alerts down here are just my personal alerts, some key support levels that I want to be notified when the price action drops there, and I ultimately do think we're going down here. But let's explain why I think we're going down here. So if you can see on this Bitcoin chart, what we've created is this head and shoulders pattern, okay, or this M top. Here's the M, and then this is the right shoulder. So you have a left shoulder, you have a right shoulder. Now generally you want to see a pattern form as symmetrical as possible, and what symmetrical would have been is the right shoulder would have come up to here and touched this line, but it didn't. It slightly just came shy of touching that, basically that symmetrical the left shoulder. That doesn't matter. This pattern is still well within play, this topping pattern, and it is massive. It is one that traders need to be aware of, as well as investors, because imagine waking up to potentially a 10 to 20% drop overnight and then more. And if you're in the other altcoins like Ethereum, which we'll discuss, and Chainlink, it could be devastating. Crypto moves ultra fast. Leverage is at an all-time high. Margin accounts are at an all-time high, which means that there could be a liquidity crisis. And when volume is uber light, it means that the price action to the downside could fall so much quicker as the margins are ultra thin. And what we're seeing here is now this head and shoulders pattern, or M top pattern, only triggers once the neckline is broken and you confirm below. And if we zoom into this price action, this is the neckline. The neckline is connecting the pivot low of the left shoulder and the pivot low of the right shoulder, and then you have this major pivot low here off of the previous sell-off, and now you're trading right into that neckline. And again, these necklines, it could be minuscule amount off, but I would say you're actually now trading below. What you really want to see, you've definitely had a breakdown, and then you got saved, you closed above, and then you had to break down again, and then you pretty much rallied all the way back up here above the neckline. And again, that's really close margin to say that you've closed below the neckline, but I'm on the side that you want to give this pattern some heavy probability and validity, because if this triggers, it's a massive move down. And right now we're seeing this candle open pretty much in the red again, and this is now forming below this neckline. Now, I don't want to jump ahead of the gun and say that this is confirmation below the neckline if we confirm today, because this day was so close. So I would like to see a bit of a more confirmed confirmation by an increased spike in volume and a clear, definite low below this trend line, potentially breaking this low down here. And you could see a small bounce off of this pivot low, but with the macroeconomic factors at bay, I am saying that's very unlikely that that happens. And what's so critical about this pattern is, let's just measure it out. So generally, to get the downside move on this pattern is you draw up a plumb line straight as possible from the pivot high on the pattern to the neckline low. And then you drop it all the way to the neckline, and then adjust your chart, because it's taking you all the way down to the downside move of potentially 15,000. So for reference, let's just draw a line down to 15,000 as a pivot low. That's a huge move. And now you might say that's crazy, it'll never drop that low. Well, you want to give patterns the benefit of the doubt. Technical analysis is strong. You want to trust the patterns and trade with what you see. And what we're seeing is a potential probability pattern outcome that has some high probability to it. And if you measure the same head and shoulders that formed here, you can see this pattern. There's the neckline of the previous one, and this is only at the beginning of the year in February all the way to May that it played out. So you had these 3 run-ups to ultra highs. And what's first daunting about all 3 of these is that yes, you made new highs, but the highs weren't significantly higher than the other ones. So you're almost creating this loss in momentum as the pattern started to roll over. You want to, when you make a new all-time high, you want to see it clear it to some certain degree, not just clearing it by a few % each time, because that tells you that big money is stepping in every single time it rallies up. Big money stepping back in to sell. So you've created again this M top pattern where you have this head and shoulders playing out. So here you have a left shoulder, you have this M top, and then the right shoulder. Pivot low of the left shoulder, pivot low of the right shoulder. Draw your neckline across. Where'd you break the neckline? Over here. How do we calculate the distance of a measured move in a in a completed head and shoulders move? You draw a plumb line all the way from the pivot high down to the neckline, and you drop the plumb line pretty much there, and look exactly where you ended. Pretty much an exact measured move of the head and shoulders pattern. So you had it at the beginning of 2021 here, when economic policy was still uber loose, and free money and stimulus and low artificial rates were the norm. Now you have this pattern here on a way bigger scale with trillions more pumped into the system, raising of interest rates on the horizon, as well as potentially tightening monetary policy in the form of reducing the balance sheet, selling the balance sheet. That is crazy. Crazy. So let's just take a look to see where we go down here. If you were dropped down to 15,000,